From Greece and gold to the price of natural gas, Mark Lackey is your morning market news covering. He's the Executive Vice President of CHF Capital Markets, and he joins me now. Mark, let's talk about natural gas to start with overall. You've made some interesting observations on natural gas around the world.
That's right. Well, what's interesting from my perspective is that in the United States, North America, we're getting about $3.60 right now on NYMEX, and yet in China you can get $16 in MCF. And of course, one of the big reasons is in China they're diversifying their demand. Their electricity demand is growing at 10% a year. In most North American jurisdictions, your demand grows maybe 1% a year. So there's been a great demand for natural gas. There hasn't been enough supply. And as a consequence, we're looking at opportunities to try to play this by looking at people who have opportunities in the China Sea and are close enough to that market. There will be LNG shipments in 5, 6, 7 years, but in the short run, in the next 3 to 5 years, I think the best way to play this is to try to play people who are on the venture market who have opportunities with the Chinese.
Why go small? Why go to the venture? Can't you go to larger natural gas companies?
If you wanted to buy CNOOC, you sure could. Yeah. And, it's a good company, has a lot of assets worldwide. But if I wanted to leverage this natural gas price per se, I'm not going to get the same leverage with CNOOC that I can get with a company like Primeline, PEH, on the venture, which is one that I do own and has a relationship with both CHF Capital Markets and CHF IR. So again, it's all in your risk tolerance, but one of the factors is I get people saying to me, what's a pure play? And since there aren't that many that have deals with CNOOC, I went through and tried to find a number. And again, I came up with Primeline, so that's the one that I own and one I'm playing, and suggesting to people that because of the deal they have with the Chinese, the project is pretty well de-risked.
Are there exploration risks when you're looking at smaller companies like this as well? I mean, they're selling into CNOOC, obviously. Right. But, I mean, is there an exploration component of it?
Well, there would be if they hadn't found any gas, obviously. Right. But they've already got a field in place that will be producing, and they'll have significant cash flow and earnings in the next 6 months to a year. So if you went back 2 years ago, yeah, I would say at that point, before really much had been found, I would have said there was exploration risk. But the company's done a good job of moving forward, and every timeline's been met. I like that because there's unfortunately a lot of people on the venture who aren't meeting their timelines these days for various reasons. So here you know that execution risk seems no longer to be there given what they've accomplished. But on balance, sure, there is a lot of risk in junior oil and gas companies before they really have any production.
When you look at that price differential of $16 to $3.60, how does that gap get closed? Does Canadian natural gas go up because LNG is introduced and we can ship into China, or does Chinese come down because fracking is introduced in China?
Well, I think, Pat, you're right. It's going to be a combination of both. I think you are going to see, in fact, I think in 3-4 years, one of the places you'll want to be is buying Canadian and U.S. natural gas stocks. I think that by and large there will be enough shipped that the price will start to go up here, and I could see $5, $6, $7 down the road here. And then I think you'll see the Chinese prices start coming down in 4 or 5 years because they're very aggressive now, as you say, more fracking. They're doing a lot more drilling. They're trying to drill offshore significantly where we know there's some good opportunities, just hadn't been done much in the past. So I think it will be a combination of the two that you will see some equalization of those prices. But again, it's going to take a while because you can't just build a pipeline tomorrow and getting LNG plants and getting all the LNG ships in place. It takes years.
Yeah. And on the other side of things, I mean, can demand grow for natural gas, for instance, in North America, because we're not doing nuclear or something along those lines? Well,
certainly there are opportunities. I mean, natural gas to me is one of my favorite sectors in terms of demand for electricity. But as long as growth is a bit muted, and I do think U.S. and Canadian growth will be better down the road. So I think there will be more demand opportunities for natural gas. As you say, I don't see a whole lot of new nuclear in North America. I think you're going to see that in other parts of the world. So I think there's still a good opportunity for natural gas. And in fact, I think some people are overestimating how much shale gas is out there. That's the other factor I believe, that as time goes on, the decline rates are pretty significant in those natural gas fields, Pat. So I think in 3-4 years, you're going to see higher prices in North America, and quite a bit higher.
Yeah, and that's important for people at home. Well, I've got you in the chair, and I haven't seen you in a couple of weeks.
Right.
Gold prices, really volatile. Do you have any sense of what's going on there, Mark?
Well, there's a number of factors, and the only thing I will say is that my bottom price early in the year was $13.50, and a lot of people told me that was too low, and now it turns out it's not low enough. I still believe when I look at paper currencies throughout the world, I'm not so sure why there's such a demand for them. I think there's a better opportunity and a safer opportunity in the gold markets. But in the short run, you're getting a lot of problems because you typically, when gold prices go down, the funds that have gold in them get redemptions. They have to sell their positions. They sell their gold. They sell their silver. It adds to the ongoing problem. Anybody who's margined, same problem. Margin calls come in. And so I think that in the short run, it's going to be volatile. I think 1150 is now my new bottom, and I don't necessarily think it's going there. But if it did, I think I'd be starting to really buy a lot more in the space. Right now I'm a bit cautious. I own some gold, but I'm not as... I've never been the biggest gold bug in the world, to be honest with you. But I've still never been a guy who believed we'd go back to 800 or some of the people that are extremely bearish on the commodity.
Yeah. And when you play gold, do you play through gold itself or silver or anything else, or do you buy the junior companies? I
usually buy a combination of companies, usually producers or near-term producers, and jurisdictions I feel comfortable with. So, because these guys have been, you know, a lot of Canadian companies that are in very good jurisdictions have been beat up really badly. Even some of the small producers have been really hammered. And so I think there is going to be a great opportunity for people who are willing to take at least some risks down the road, because I don't think the venture market's going to be trading at 860 forever.
Yeah. Well, opportunities in natural gas and opportunities in gold. Mark, great to have you here.
Well, it was great to be here.
See you in a couple of weeks.
Absolutely.
Good. Mark Lackey, Executive VP of CHF Capital Markets. So